Hello everyone, welcome to the Ichimoku daily analysis for the Euro US dollar FX for Monday, February the 27th, 2012. Well, the market remains in an uptrend today. A candle from the previous day's trading that made a higher high and a higher low. Today's candle we failed to take out the high of the previous day's trading, but the sellers weren't strong enough to take out the low. So in bar chart terms it's an inside day, and does mean that the uptrend continues, so there hasn't been a change of trend. Having said that, however, it does set the market up for a potential change of trend because the buyers lost commitment up around the high of the previous day's trading. And we can see that the market closed with a red-bodied candle, and the red body denotes the sellers making net bearish progress, and it's been some time since we saw the sellers make that much progress. So that also does set the market up for a potential change of trend. Now this is similar to a Japanese reversal pattern called dark cloud cover, but it isn't quite. For this to be dark cloud cover, we would require the current candle to open above the previous high, and that hasn't happened, so it isn't quite a reversal pattern. But we can see that the buyers have lost upside momentum because of this red body candle, and a fairly large red body candle. Now a few days ago the market did take out this 133.20 area of resistance in a bullish manner, and we saw the market trade higher after the previous day's trading. A bullish breakout up above the cloud as well, so a bull signal in Ichimoku charts, and the market remains bullish in all three time frames by trading above the cloud, the Kijun-sen and the Tenkan-sen, and the Chikou span is supporting that. It's confirming the bullish activity overall in the market by trading above the corresponding price action. Now some Ichimoku chartists look at the Chikou span in relation to the cloud, not the previous price action, and that's within the cloud, so some may say that the Chikou span is not confirming the price action. I prefer to look at the Chikou span in relation to the previous or the corresponding price action here. For tomorrow's trading, we do need to watch the low of the current candle for a potential lower high and lower low. If we do see that occur, then we should look to this previous resistance level at 133.20 for potential support, and we do have very strong support down below there at the top of the cloud, which is at 132.40 roughly. We also have the Tenkan-sen and the Kijun-sen close by around the 132 level, so they will offer very strong support, and also at 132 we have a previous strong area of resistance, so that will offer itself as support. So very strong support down below where the market's trading at the moment. To the upside, we do have some resistance up around the 135.49 level and up to 136.14. So if we see this market pick up upside momentum again, then we certainly could see the market trade up through the 135 level and test to higher levels. So let's watch around the high of those candles, which was around 133.70. So obviously the market is in an uptrend in all three time frames, but the short-term dynamics are failing to support that uptrend because of the sellers coming into the market trying to take some downside momentum. So there is potential for a change of trend. Next, moving to the Aussie dollar, US dollar, and here we see a green body candle, a continuation of the trend to the upside. Previous day's trading we had a candle that made a higher high and a higher low. Today's trading we have a candle that's made a higher high but a lower low, so that does raise some doubt about continuation of the trend to the upside. We have in bar chart terms an outside day, and that's a day of indecision, and it's indecisive because the buyers were strong enough to take out the high and seem as though it's continuing the trend to the upside, but the sellers throughout the trading day were also strong enough to take the market down below the low, and in this case a fair way down below the low. The interesting thing is, however, that we do have this long shadow on the bottom of the candle, and the market failed to close down below the previous low, and this long shadow represents very strong upside price rejection from the 106.50 level. You can see on these candles that the sellers lost commitment as they were trading down around this region, around the 1065 level, and we can see here previously that it was an area where the buyers lost commitment. So this illustrates how A, support and resistance works in a zone, and B, how support can turn into resistance and resistance can turn into support. Now, just looking at the candle, it is a green body candle, and that tells us that the buyers have made net bullish progress. So that does suggest that the trend will continue to the upside because the trend is up. Let's not forget that. The market has just closed above the 107.52 level, but not significantly so, and that's a very strong level of resistance for this market. We can see as the market tested up a bit above that level that it was rejected from around that area. We do have strong resistance up to 108 and 108.43, where we can see this swing high and the shadows on the top of these candles where we saw previous rejection. We also have a trend channel that's been set up, and once this swing low was taken out, we were able to draw a trend line here from this high between these two peaks, and then we were able to draw the trend channel between the intervening trough parallel to the trend line, and we can see that the market found support at the trend channel as well. So if this market does come off, we should be looking to the trend channel once again to hold as an area of support. And if we see this rejection with these candles with the long shadows on the bottom, then that does set the market up for a potential trade back up to the top of the trend line. In terms of Ichimoku, the market is bullish in the long-term time frame by trading above the cloud, bullish in the medium-term time frame by trading above the Kijun-sen, and bullish in the short-term time frame by trading above the Tenkan-sen. The checkout span here is above the corresponding price action, so that's confirming the overall bullishness that we're seeing in this market. Now, in terms of patterns as well, this trend channel that we've drawn could also be interpreted as being a flag. And here we have the prior uptrend, the congestion, and it looks like a flag waving on the top of a flagpole. And they tend to be continuation patterns, so we should be on the lookout for a potential breakout up above the upper boundary, which at the moment is roughly around this 108 level. So that 108 level is very, very significant for this market. So an upside breakout would be confirmation of completion of that flag pattern and potential continuation of the trend to the upside. There is also potential for that pattern to be a change of trend to the downside. It can be a reversal pattern. Not normally so, normally a continuation pattern. So we should look to the lower boundary, and that coincides with around this 106 level, and that is a very important area of support for this market. So for the next day's trading, let's watch these boundaries. Certainly watch the highs and the lows of these candles for a potential change of trend to the downside or a continuation to the upside. If we do see a breakout up above the 108 level, however, we would like to see the market trade up through 108.43 in a very bullish manner to confirm any breakout, because we do have fairly strong resistance up at that level. To the downside, however, there's only a moderate amount of potential support around the 105.70 level, and if we do see a bearish breakout down below there, we could quickly see the market trading down to the 103.77 area. But let's wait, let's watch how the market resolves from this congestion area, this flag pattern that's developed, and that will most likely happen over the next few days. Next, moving to the US dollar Japanese yen, and here we see a change of sentiment in the market for today's trading. The first day where we've had a fairly large red-bodied candle. You can see the previous trading for the last month or so, and a lot of green-bodied candles, some small doji type candles and spinning top type candles. A few days ago, a red-bodied candle, followed by a very large bullish green-bodied candle, and then today a relatively large red-bodied candle. So that does set the market up for a potential change of trend to the downside. Now, we highlighted this yellow area a few days ago as a large zone of resistance for this market. Previous days trading, the market closed within this zone after a bullish trading day, and today we've seen the sellers come in and take control of this market in terms of pushing the market to the downside. We saw the buyers lose commitment in that area, and that will hold as a zone of resistance, which extends from 81 up to roughly 82.20. So a very large zone of very strong resistance. Looking at this red-bodied candle, the sellers have made some very strong net bearish progress on the day between the open and the close, and it's been some time since we've seen that in this market, so it does set the market up for a potential change of trend, but the trend hasn't changed yet. The trend is still up, with this candle today has made a higher high and a higher low. The market has only just closed down below the midpoint level, so even though the sellers have taken control of this market, it's not terribly strong control, so it's only a moderate form of control, and we do have this largish shadow on the bottom of the candle where the sellers lost commitment, and that was as the market was testing at this support level at 80.22, and that is a very strong level for this market over the next day or so of trading. We should also look to the Kijun Sen and the Tenkan Sen, and especially the Tenkan Sen here, the green line at 80, which will hold as very strong support for this market. Very often when the market has strong upside momentum, that's the first level where we see support, and we tend to see the market bounce off that level. So if we do see the market test down to there, look for bullishness coming back into the market for a potential retest up to higher levels. We can see the strong upside momentum in this market in the fast-term time frame by the slope of the Tenkan Sen. It's pointing up very sharply for quite a bit of this trading. The angle has declined a small fraction, but that is because of the current day's trading that's developing at the moment. In terms of Ichimoku as well, we are trading above all of the three indicators, so the market is bullish in all three time frames, and the checker span is above the corresponding price action, confirming that bullishness. But as I've said, there is potential for a change of trend because of the market not supporting the buyers in terms of the short-term dynamics. The sellers are attempting to take control. They have taken weak control, but they did lose commitment. So 80.22 is a very important level for the market over the next day or so.